How's it going, guys? We'll just give it a few minutes, then we'll get started. That's right, Rashad. I am back. Hope you guys are doing good. And just confirm you guys can hear me. Let's do a quick mic check. Get about a minute and a half before we get started, but it's going to be a good day. A lot of good stuff we can cover. Eric, yeah, I caught a little from the pump. So, caught a little from this. I know Luke made those Bitcoin and Solana long calls. So, awesome stuff on that. Hope some of you guys made some money. Again, a lot of green in the market. Love to see it. We'll actually talk about some indicators that you guys can use, and also momentum versus leading versus lagging, etc. So it's gonna be a great stream. You guys are gonna get a lot of good tools you can use in your technical analysis tool belt. Awesome. Glad you guys can hear me. Appreciate it. Rashad, missed you too. All right, Eric got a 5% short Bitcoin. Congrats on that. I know there's a lot of resistance near 88K, so that's a level I'm definitely watching, and it could be a good short level. I posted on my X account as well that 88K is a good short, so definitely keep an eye on that if you guys have not. But yeah, a lot of good price action, and we will break it down what I'm looking at, and then mainly continue with our previous TA Academy videos where we cover, again, the basics of technical analysis and the things that you need to know. So make sure you guys stay tuned. It is going to be a great video. But with that, we will go ahead and get this stream started. All right. So again, this is the foundations of technical analysis. This is a series that we've been doing over the past couple of weeks, and the first video we covered was technical analysis basics, where we went over support and resistance levels and how to draw those. Again, if you go to the Jim Hunters YouTube account, you can see those videos. We also had the introduction to chart patterns, as well as different time frames you can use. And then finally, last live stream, we had a introduction to candlestick patterns and how you can use those in Confluence with the aforementioned metrics plus indicators to help when you should long or short and help increase your profitability. So now this video is going to be an introduction to indicators. So we're going to talk about the different types of indicators you can use. You can see there's various different types: momentum, volume, divergence, overextension, also known as mean reversion, buy-sell indicators, retracement, such as Fibonacci, and then standard support resistance, or even trend indicators. So first of all, what are indicators? Well, I'm sure you've seen on my chart, I've posted on X, I've posted in my market updates with my Bitcoin analysis of the different indicators I'm looking at. Now you'll see I've noticed, I've used RSI as well as stock RSI. These can be seen as overextension indicators, as well as momentum indicators in a way. And so they're helping me to decipher when price is overbought or oversold, meaning eventually, price is getting a little too heated when it's overbought. It should come back to the mean in the center, therefore it should sell off. Or if price is oversold, people are getting too scared. At that point, I start looking at buy signals. And so again, you can use those in Confluence, which we'll talk about, but these are all the different types of indicators where you can have different ones leading and lagging. Now, the difference between leading and lagging indicators is the only leading indicators in the market is going to be volume and price, because those are instantaneous, right? Just like we talked about with candlestick patterns. Those are leading indicators. You can actually see when the reversal is going to happen. Just like we talked about a hammer candle. Okay, in a downtrend, you see a green hammer candle that indicates bulls have actually been able to close that candle, in the top 10, 20% of the body, therefore showing a reversal is imminent. And at that point, price reversed, and that's where you had that leading indicator, especially with volume. If you have sudden spikes in volume, such as big green candles followed by, at support levels, etc., that's going to be leading because you can see real time what's happening and catch that move as it happens. Now, lagging indicators are going to be things like momentum or moving averages, because again, those lag, and eventually when you price crosses above, say, a 200-day moving average, well, more times than not, price is going to actually have been going up for the past 5 to 10 days before it actually crosses above that 200 EMA or more. So you're not catching the Pico top or bottom, yet you're still able to catch the meat of the move if trend is actually shifting and you are starting a new bullish trend. And we'll talk about that as well. So we're going to go over all these different indicators and how you can use each of them accordingly. Now, I talked about the moving averages. There are two different types of moving averages. So you have simple moving average, then you have exponential moving average. And so with simple moving average, this is a literal average of X amount of candles, meaning if you're on the daily time frame and you're on the 200-day SMA. So that's going to take literally an average price over 200 days, and it's going to plot that line. And so if over 200 days Bitcoin price had, Bitcoin's price was an average of $84,000, then that SMA is just going to post there. Now, the difference between the SMA and the EMA, or the exponential moving average, is an EMA is actually going to place more weight towards the most recent part of the chart. And why that's important is because obviously we've had a lot of volatility. There's a lot of events with tariffs, Russia, Ukraine, etc. And so maybe a lot of the move may happen in the last, half of the chart, or the last third of the chart, or even the most recent 10% of the chart. And so you want to incorporate that average price a little bit more than what happened 3, 4, 5 months ago, because you're able to actually react in real time versus just taking that SMA average, and maybe it may not be the most accurate because, again, it doesn't take into account that most recent price action as strongly. And so I like to use EMAs, but again, I also like to combine it with SMAs, and we'll talk about that and how we were able to catch this move, this break higher, because we were looking at a combination of SMAs and EMAs. And so how do you use moving averages for trend identification? Well, just like on this chart here, using EMA on the daily time frame, if you use the shorter EMAs, like the 5-day EMA or the 10-day EMA, these are going to be your short-term EMAs. So if any of you guys scalp, then potentially using these 5 or 10-day EMAs, may be useful. Quick shifts in trends. Again, I don't use these. They're a little bit too dynamic for me. But then if you start looking at the intermediate EMAs, such as the 20 EMA or 50 EMA, now we're talking, because these can be used to identify trends and take trades slightly over a longer time frame. So whereas the shorter ones, 5, 10-day EMA, those can be for intraday trading, maybe on the 15-minute or the 30-minute or daily. These are trades that you're making over a few hours or just a few days at most. Whereas your intermediate EMAs, you're making these trades over at least a week, maybe 2 weeks, depending. And so this is one where I'll show actually an example where the weekly 50 EMA actually called the bottom of Bitcoin near 77,000. And I also posted about it on my X account. And so that's something where, again, we post these market updates. We make sure that you guys are looking at all of the different angles, all the different metrics, so you can catch these moves ahead of most. Now, finally, you have your long-term EMAs. These are the 100-day EMAs and the 200-day EMAs. So these, instead of looking at a few weeks, these could be trends that are shifting over maybe a month or more. Okay, these are long-term trends. So these could be even your portfolio indicators. What I mean is, if you're holding certain coins for 3 months or 6 months, well, now you want to look at the longer-term EMAs, because that signals an overall shift in the trend that could take months to play out. And so just like when we crossed under the 200 EMA, we've been under there for 2.5 months. Okay, we shifted to a bearish sentiment, which we'll go over as well, that confirmation. And now we may be shifting to a bullish sentiment. Okay, a bullish trend, bullish momentum. And so we'll go over that as well. So again, you can use these different EMAs depending if you're using short-term, intermediate-term, or long-term, if you're scalping or swinging, and what your time frame is. So just a little tidbit there for EMAs. Now, talking about momentum oscillators. These are very, very important. And these are ones you've seen me use all the time. Every single Bitcoin update I post in Gem Hunters, I'm using the RSI and stock RSI. And there's a reason why. The RSI indicator, one, relative strength index, it's one of the most used indicators around. Okay, so you have the self-fulfilling prophecy where everyone's looking at it similar to support and resistance levels. Now, most people don't know how the RSI is calculated. Okay, the RSI, its default setting is 14 days. And so 14 days is what it's doing is it's looking over the past 14 days of candles. And at that point, you're actually able to determine how many candles went up versus how many candles went down during those 14 days. Okay, so it's measuring those. And so the big thing with that is it's showing you that, okay, if over 14 days price has consistently moved higher, well, that value of the RSI is going to get higher. So it shows you price is getting a little heated. Like on this BNB chart here, we can see RSI is overbought and the stock RSI is also overbought. And now you're actually marking a top and it reverses back to the downside. Okay, mean reversion indicators, reverting back to the mean, reverting back to the middle. Now, looking at the MACD, which is this middle indicator here, it didn't actually get overbought, or it doesn't measure overbought, oversold. It measures shifts in trends, which is lagging. And so you can see when it crossed to the downside here, yes, it was a few candles later, but you still caught the meat of the move because it is a momentum indicator. It still measures the overall trend. The trend crossed the downside. RSI and stock RSI were already overbought, but this is your confirmation. So if you want to wait for that 3 confirmation before taking the short down here, then you would have caught the move afterwards. And so same thing here. When RSI was oversold, stock RSI was oversold, mark the bottom, then MACD crossed to the upside, signal a shift in the trend, and you caught the meat of the move there. So it just depends what kind of strategy you want to play. But these momentum oscillators are very, very powerful because you can see they can mark shifts in the trend. You may not even catch the Pico top or bottom because the RSI and stock RSI can stay overbought or oversold for extended periods of time. But if you combine them with the MACD indicator, that could be a confluence, even though you are missing, the early part of the move, you're still catching the meat of the move. So that's the advantage of using momentum oscillators. Now, volume-based indicators. Okay, I mentioned that leading indicators, they were volume and price. And so with volume-based indicators, you have what's called on-balance volume, OBV. Okay, so this basically measures how much volume is coming into the price and if there's more positions being created or less positions being created. Okay, where's that money flowing? Right, real time, where is that money flowing? Is what's going on with the volume, the on-balance volume, matching what's going on with the price? Because now we'll talk about divergences as well in a minute and how those can actually show you that price is getting ready to reverse. Just like with this OBV, okay? So on-balance volume, volume's increasing as price is increasing. That matches, that tells you this trend is legitimate. This uptrend is legitimate, okay? It matches the volume. Now what happens when you have an uptrend in price, but the volume isn't making an uptrend, okay? It's stagnating or it's diverging. Okay, or it could be even declining, right? That's bearish divergence. But this could actually be bearish divergence as well if volume staying the same. So at this point, volume isn't increasing. It's mainly staying the same, whereas price keeps going up. So eventually now you're going to see this volume taper off. And this is when you combine with your RSI, your stock RSI, your MACD, okay, to signal a shift in the trend because volume isn't matching what price is doing. And then we see that divergence play out. Volume actually starts declining. Price finally follows suit, and now we're in a bearish trend. So that's why volume is so important because you can see the moves before they happen. And there's also divergences on the RSI, the stock RSI, and others, not just on balance volume, but real time you can see if volume is matching what price is doing. If it's not, well, maybe now price is getting heated and now we could have a reversal very soon. Now you also have volume profile. So volume profile is, I'll go ahead and link that real quick. Daba is asking for my X account here. So it's x.com/thecryptodata. So you can see volume profile. Now, volume profile is measuring where that concentration of liquidity is at because volume is one of the only leading indicators. And so if you saw that, okay, around this level here, let's just say we're looking at 115 for whichever stock this is. If we're seeing volume is actually most concentrated in this 115 area, well, inherently that's going to mean it's going to be a significant level of either support or resistance. We've seen resistance because, again, you have a lot of buyers and sellers, a lot of action is going on. That's why volume is the highest. There's the most tension there. Now, it's going to be an area of contention until it's finally broken above. And so you can see we chopped around, finally broke above, retested this area as support, and then we sent to the upside. That's why volume profile is so important as well, because you can see where most of that liquidity is at, and then you can also helps to draw your support and resistance levels and see big inflection points like where we're currently at now with Bitcoin. And so definitely a good area to watch. So now with that said, we're going to cover all the indicators real time, and I'll show you exactly how I use them. So we're going to go ahead and cover a lot of these indicators here. So with these, let's go ahead and go on BloFin. So for anyone who's not trading on BloFin, definitely make sure you sign up under the BloFin referral link for gym hunters. And then if you guys are wondering how to chart on BloFin, because this is the default page, especially if you're trading on futures or spot, all you got to do is go up to the top right here and click this expanded box icon, and you can actually expand the chart. Makes it very easy. And if you want to minimize the chart, click the box again in the top right and minimize it. You can trade. Okay, so very, very easy. So with that said, let's go ahead and just go over the moving averages, because that's something that I was covering earlier. So I mentioned that I use the SMA, EMA, both on the same chart. And now if we open up here, you can see I have the 60-day simple moving average, the 200-day exponential moving average, which is the purple line, the simple day is the blue line, and then the 50-day exponential moving average, which is the green line. Okay, now if you look, whenever Bitcoin ended up crossing below these and actually stayed below them for a few candles, that marked a shift in the trend. So you can see here, it bounced off them as support, and then it couldn't close above, bounced off as support. This wick bounced off as support, and then finally, when it stayed below them for multiple candles, that's when they acted as resistance. And so you can see clearly these moving averages are very significant, especially on the daily time frame. Now, I'll even take it a step further. Going on the weekly chart, look where the 50 weekly EMA was. Right here, and price bounced perfectly. We can even see this if we go here real quick on trading view. You can see a little bit more data, but just look how many times that Bitcoin bounced off of this 50-day EMA on the weekly. Okay, so you can see this level was significant, and then we bounced off of it perfectly here. So that's why it pays to look at these moving averages that many people are looking at, the 50-day, the 200-day, even the 60-day. Because the 60-day is actually default on BloFin. So they don't have the 60-day here default for no reason, right? So this is a significant level. As we've seen, it's acted as resistance with the 50-day EMA. And now what's happening is it acted as resistance again for the 50-day EMA, resistance again. And so now what's going on is we're at an inflection point. And I posted this in my Bitcoin market update. As I said, guys, we just crossed above all three of these EMAs, which have acted as resistance in the past since beginning of February. So this is very, very important. And for that Mexican saying, what is this guy's X account username? The crypto data. So that's why it is very important that you guys are looking at these moving averages, because these actually do create self-fulfilling prophecies and are respected, okay? And they're even more respected when you combine them with indicators, which we'll talk about in a minute. But the fact that we crossed above all three of these and these came to a head, this is a strong resistance. When you have all three of these moving averages like this, you can see last time this happened, two of these, they created good support. Now, all three of them, it's a huge, huge deal, okay? And so I wouldn't take this lightly, especially if we can close the daily in about 5 hours above all three of these moving averages. At that point, what I would be doing is I would be looking at this level as major support now. This inflection point, you know, 85,500, I'll be looking at this as major support. And so if you're shorting right now, which I mentioned, that could be a good short here, around 87 to 88,000, okay? I actually am short at 88, and so this is a good short, but if you're looking to take profit around this level here, where you have that initial breakout, could be a good level, because now everyone's watching and everyone wants to get in, because everyone was originally looking for this to hit this and reject back to the downside. It was such a big resistance, okay? Now it's going to be a big support, in my opinion, if we can close above. And so what I mentioned was using this in Confluence with other indicators. Okay, so now we have, let's go ahead and delete all the drawings. Okay, so now we have the moving averages we talked about and why they're important. Now let's talk about the different momentum indicators. Okay, so you have the RSI and the stock RSI. So the RSI, like I mentioned, it measures relative price strength. Okay, how many times, based off this 14-day setting that we have here, you know, over 14 days, how many times did the candle go up versus when it went down? It's going to create a little value from that. And now what we see here is it's important because when the RSI is oversold, at that point you can start looking for a potential bottom. So it was near this 200-day EMA, it was getting oversold, and then look what happened. Eventually we had a nice bounce. Now if you actually want to take that a step further here, you can even look at whenever we came to this point here I was talking about. Whenever you have the 50-day EMA and the 60-day SMA. You know, it came to both these areas and the stock RSI was oversold. So at that point you had Confluence. Again, Confluence is key. Anytime you guys are looking at indicators, never just look at one and call it good. Like you want to look at, okay, where is it at here? Is it at major support, right? Like we can even draw here, resistance at around 91,200, acted as support on this level here. That's why the very first video we went over was support and resistance. Support, support, support right here. If you would have caught that and saw the stock RSI was oversold when they were at these moving averages, when they were at these support levels, you would have caught this long and caught the long from 91.9 all the way up to 102,000. A 10% move, 50% on 5x leverage or 100% on 10x leverage over a week. That's insane returns if you were prepared like this. So that's why it pays to use indicators as Confluence. But I caveat that when you use too many indicators, you get what's called analysis paralysis. And so you're too frozen because you want all of your indicators to be in Confluence. Well, just like we saw here, okay, the moving averages were in Confluence, the stock RSI was in Confluence, but the RSI wasn't oversold. Are you going to wait till it gets all the way down here? Well, it hasn't been oversold for a long time. So, you know, price is going to do whatever you want no matter what. So if you're looking at least a couple that have been in Confluence and it's at support, that's enough for me. 3 out of 4, I'll take that. Okay, so you got to be looking at everything, and everything doesn't have to match. You can have a few, but if it makes sense, as well as, you know, looking at the fear and greed index. Oh, that's at 25. That's at fear or extreme fear. Okay, now with these other indicators, okay, I'm going to long because usually that fear and greed is a good measurement when we have a mean reversion trade, meaning when there's a lot of fear in the market, usually we bounce. Buy when others are fearful, sell when they're greedy, as Warren Buffett always says. So that's why it's important to look at those multiple indicators, okay? So let's go ahead and remove the drawings. All right, so now we talked about those. Now let's go over an actual Fibonacci retracement indicator. Now this Fibonacci retracement is extremely important, and I'll mention why, is because there's a lot of trading algorithms that look at the Fibonacci ratios, even the golden ratio of 0.618. Extremely important. I'm sure you guys have heard of that. If you haven't, it's called the golden ratio. Okay, it's 618. There's a lot of connections either to the universe or just in general. It means that price usually retraces to the 618 level. Okay, it may retrace that 61%, and then from there it could bounce. Or it could reject from the 61%, right? Retrace could be used either way. Retracing to the downside or retracing to the upside. And so let's go ahead and go over real time that Fibonacci retracement and why it's so important and why it can predict moves and retracements of how far price will go in the opposite direction. So in order to find the Fibonacci retracement on BloFin, all you have to do is go to the left side here, and actually the first indicator is going to be Fibonacci retracement. Now, you may ask, okay, how do I use this indicator? I've never used it before. Where do I draw the retracement? How do I know where to draw it? We're going to talk about that. So looking at this level here, okay, we had a huge rise in price, and then we had this rejection. And so in your head, you could say, okay, I think this could be a big support level, okay? Or sorry, resistance. This could be a big resistance level. And so now you see price coming up here, and now you see price rejecting off of it. And so at that point, you're like, yes, this is a big resistance level. And now I'm going to look to see how far it can retrace back to the downside. So here's what we're going to do. So we're going to take the Fibonacci retracement. And at that point, you're going to take the top. And then you're also looking for the bottom, okay? So now where you find the bottom at is, look here, it's bounced twice. And so you have your support level now, okay? Your major support, right? It was resistance, support, acted as support. So now this is your support, okay? So now this is your support level and resistance level. So what you can do at this point is drawing it from the top and then also drawing it from the bottom and seeing, okay, where is price going to retrace, right? And actually what you can do here, sorry, other way. Okay, take it from the top and go, okay, bottom up to the top. Okay, because you found your support and now you found your resistance. So you can actually draw it up and then see how far price can retrace from here. So at this point, looking, and you can see the 618 level. I know it's a little bit hard to see, but the 618 level is going to be right here around 98,600. So now, once price has reached this resistance, you're like, okay, now we're going to retrace, but how far? Well, if you look at this 618 level, I'm going to go ahead and going to draw a little rectangle so you guys can see it a little better. But, okay. So here, so this little purple box here. So this is the 618 level. Now look what happened. Whenever price rejected, look where this wick went down to. Exactly, 618. Okay, so this is an important level because you have a 618 to the 65. So in this little range, this golden pocket, as they say, price bounced exactly off of this level. So let's go ahead and draw. Price bounced exactly off of this level. Now look, it came down again. Price bounced exactly off of this level again. And then finally, it went down to the 786 level, which is another very, very important level. But look what happened here. The 618 now is actually acting as resistance. It can't break back above it. So it's a very significant level, both for the buyers and sellers. And so now, if it's acting as resistance, we break to the downside, and now we're continuing lower. Okay, so that's one way you can use Fibonacci retracement. One, to see how low price is going to go, because usually, you can have price balance and it'll continue higher. But also it can be used as invalidation. If we can't close back above, well, price continues lower and follows through. And now look what happened here. The 1618, which is another extension. Okay, if we extend this out even more, look what happened at the 1618. We bounced perfectly. Okay, so you can't make this up. I mean, these levels are respected. Now, on the same token, let's go ahead and go over the opposite end. Okay, because we saw for shorting to the downside, how much it retraces to the downside. Now, let's see how much it can retrace to the upside. So it's going to remove the drawings. Okay, so same thing here. Okay, so you have these two levels. So I said you have support, right? And you have this big resistance level here. Okay, so you have support here. Now, this has already been proven as support multiple times, this level. Okay, this level here, around this 92,400. Multiple times it's wicked down. So now when you see price maybe bouncing off this level because it's very significant, well, now you can start using this for your Fibonacci retracement. So you already have your top, and now you have your bottom because it's your support, okay? So if we have that, and we draw that there, then let's see what happens. So now we have our top and bottom. So now let's see how much it retraces to the upside. So we're expecting at least to go to the 618. Remember, you have this little pocket here between the 618 and the 5 area here. Okay, so again, we'll draw the rectangle just so you guys can see it. So let's go ahead and draw that. This is probably the most significant level in all of crypto, is the golden pocket, 618. Everyone's looking at that. Okay, so at that point, now you have this 618 level here. And now look what happens is, actually, let me draw it up here. Okay. So now look what happens. The 618, it comes up to this level and it actually rejects off of it perfectly. And then when it comes back up and breaks above it, look what happens. It actually acts as support. So that's why this level is so important, because usually people are looking to short at this level because it is, most of the time it does come up to this level. And people ask why, is because historically, again, when you have price going in one direction, eventually you're going to have a retracement. And usually that retracement is around 61% of the move. That's what these are measuring. These are ratios, percentages of the move. So the move went from 106.4 all the way down to 92.5. Okay, well, you can expect it to retrace at least up to 101. That's 68% of that move before continuing further down. So now what's happened is now it broke back above and now it's acting as support. Okay, see how crazy that is? Is it price acts as support now? And then when it breaks back above, it confirms a downtrend and continues lower. But this level is significant. So wherever you're charting, the biggest thing with Fibonacci ratio is you are charting it the right way. And that's why I went over support and resistance in the first live stream that I did for this TA Academy course, is because support and resistance is where everything else stems off of, right? It's based off of volume liquidity. It's based off of self-fulfilling prophecies. People call them magic lines, but they work, okay? And if they work, why wouldn't you use them? Even if it's just a little, they work a little bit more than they don't work, right? You're trying to look for any statistical advantage in crypto, especially as more people get in it and the difficulty gets higher. So that's what I'll look at for Fibonacci retracements. They're very important, and that's why you want to look for big levels to mark for drawing your Fibonacci, okay? If you're looking for retracement to the upside, then you start at the top and go to the bottom. And then you extend it out. Okay, so if you find two big levels, okay, going from the top to the bottom, and then that's going to be my retracement up. But if you're looking for a move to the downside, you're going to go from the bottom to the top. Okay, so it almost feels like it's opposite in a way. But so from the bottom to the top, and then you have your retracement to the downside, where you can see your wicks act perfectly as support at this 618 level here. So just depending, but that is in a nutshell where you can see these play out and how they can play out so perfectly as support and resistance levels. So I love to use Fibonacci. Fibonacci's great, and everyone should at least experiment with it if you haven't. But okay, so we talked about retracements, talked about momentum. We already talked about chart patterns. Already talked about mean reversion indicators, overextension indicators, for overbought, oversold, with the stock RSI and the RSI. And then now let's go over divergence. And so divergence is something where I've talked about it in my videos. I've talked about it in my market analysis, but I don't think many people either understand it or know what to look for. And so let's go ahead and cover that. Now, what I want to preface this with is the RSI, when you're doing divergences, drawing them, okay? A lot of people will use the RSI, for example, and they'll say, okay, I have a big divergence across 2 months. It's been down while price has been going up, or, you know, they'll use some long time frame. I want to preface it with this, is whatever time frame you're using, or I guess whatever length you're using for the RSI, say it's 14, okay? It looks over 14 candles. So theoretically, you want your divergence to be within 14 candles if you want to play divergences correctly. Most people will say we have a divergence over 3 weeks, and they're using a length of 14 for the RSI. They're not using a length of 21. Okay, so that's the thing you have to watch out for. Is just whatever you're using, make sure it lines up with your RSI. So RSI's default setting is 14, so 14 days. So let's see if we can find a divergence in 14 days. Well, I see one that's over a few days, and it's very, very subtle. But if you know what to look for, this could play out perfectly. So here, divergence is saying price doesn't match up with what the RSI is showing. Meaning, price is making a higher high, while the RSI is making a lower high. Okay, you can see that clearly. RSI is making a lower high, while price is actually making a higher high. So that shows price strength is actually weakening, and it could be, this price could be rising because it's low liquidity, or because, again, there's too much euphoria in the market, but the price strength behind the scenes isn't matching this. And so with that, you could combine that with your stock RSI and be like, okay, I'm seeing the stock RSI being overbought. So usually that means it moves to the downside. And now once this finally plays out, this marked the top when Trump made his meme coin, a couple days after he got elected, and then boom, that was it. So that's why it pays to look at divergences. While they're more subtle, and you just need to keep them in mind more, they may not happen as often, they can still be very, very accurate. Now let's even go over some more. So here's another one. Okay, so this one is over, what, 10 candles, 12 candles, but it still is significant. So for example, price is making a lower low. We're looking at close here, okay, the close price, whereas the RSI is actually making a much higher low. So what happens after that? Bullish divergence is what we call this, because you want to look at the RSI, what it's doing in relation to price. That's the divergence. So bullish divergence, making a higher low. And what happened was you saw a nice move to the upside. Now also, you have the stock RSI confirming, making a higher low as well. Okay? And so that's where you have the bullish divergence coming into play. And so that's why it pays to look at those different divergences. Even right here, this is another perfect example. So even though you had RSI lining up with what price is doing, RSI is making a lower low, price making a lower low, what's stock RSI doing? Stock RSI is actually making a higher low. So now there's this divergence on stock RSI versus price. So if you're only looking at RSI, you wouldn't have caught this move. But if you're looking at stock RSI, well, there you go. There's the move right there. Okay, so that's why it pays to look at both indicators. And that's why I always love to look at both. Even here, I mean, we have support, support, support. Now you have the stock RSI forming a double bottom. So you can have patterns within indicators. Remember we talked about chart patterns not too long ago? So chart patterns can actually come into play with indicators. So double bottom on the stock RSI Nice bounce right there. Okay, so definitely look to combine that, guys. Like, there's so many different tools you can use for technical analysis. I'm trying to give you guys the basics, but the staples for these indicators that you need to be using. So definitely important to watch all of these. Now, I know I've been talking a lot, so I will go and look at some questions real quick, and then I will finish up with a few things talking about volume indicators as well. Let's see. I'll go ahead and pop this out on the chat so you guys can see it. Give me 1 second. All right. All right. Let's see. Haitian said, did great on the long on BTC. Glad you guys are making money on the BTC long. Luke nailed that with that call. Let's see. Yep. Hear me perfect. Awesome. Let's see. Edvard said Sol's going to go to 125. It's possible, right? If Bitcoin retraces, everything is based off what Bitcoin does. I mean, you can have the most bullish altcoin in the world, but if Bitcoin decides it's going to crash, most likely 95% of alts are going to crash as well. So there's always exceptions, but just keep that in mind. Let's see. Philip says your streams and posts are so helpful. Thank you so much. Hey, appreciate you, Philip. Thank you so much. Scro says no webcam today. No, so I never do a webcam. You know, that may change in the future, actually, with some more videos we're going to make in the future. But for my videos, like the weekly market overview, my TA Academy videos, I just record my screen. Weekly overview of the market, Julian, is going to be tomorrow, actually. So long story short, I was at a cousin's wedding. Now I'm finally back. And so I had to delay that stream. So I had to push Sunday stream to Monday. And then Monday stream, I'm pushing to Tuesday. So the weekly market overview is going to be tomorrow at 12 p.m. CST. For any of you guys who are wondering about that. Let's see. Mark says, do we need to learn all of that for our Confluence trade style or just pick some trading indicators that work for us? So Mark, here's the thing, right? So I mentioned analysis paralysis. And so if you aren't comfortable using all of these indicators, you know, only use the ones that work for you. Like if you have a strategy in place, use that. Because there's various different strategies, just like with anything. Some people are going to use trend indicators. Some people are going to use mean reversion. Some people are just going to use, you know, the RSI or moving average. So it all depends what works for you. Like a lot of times the simpler strategy is the more successful one. And so don't try to overcomplicate it. But in my opinion, just use some of the staple indicators. And if you find some good ones as well, then you can use those. But just backtest your strategy is what I want to harp on. Because if you don't backtest your strategy and think, oh, this one time this indicator was overbought and price went down, so I'm just going to short whenever it gets overbought again. Well, look at the past. Over the past 50 times that indicator was overbought, one, how long did it take for price to short or go back to the downside? And two, how many times did it? Or did it just keep continuing higher? Okay? Because if out of 50 times the indicator was overbought, price only went down half of that, that's not good. But if 75% of the time price went down when that indicator was overbought, and it went down within 3 days, well, now you know, okay, I'm going to actually start DCAing. So DCA shorting, meaning over 3 days, I'm going to, you know, short or layer in my shorts, and then price should revert back down. And so you always got to look at the back testing data, always look at the past and see what's happened. But again, as Luke always says, history doesn't repeat, but it often rhymes. And so you got to make sure you're looking at the data and making sure it's on your side. Let's see. Wasim says, all guys like this stream, at least only 11 likes, 100 watching. Yeah, guys, if you could like this stream, I'd appreciate it a lot. It helps me a lot. It helps me share these streams for free for you guys. And also, just, again, it helps grow Gem Hunters because we want to make this the go-to crypto group. It's not a pump and dump group. It's a group that provides value for everyone. We try to provide the most accurate data for you guys, as well as give you guys the skills, because the popular saying, give a man a fish, feed him for a day, teach a man to fish, feed him for life. And that's what we're doing. We want to feed you guys for life, metaphorically. We want to make sure you guys have the tools you need to navigate this market, because there is so much volatility, so much uncertainty. And the more tools you have in your toolbox, the better prepared you can be whenever opportunity presents itself. All right, Daba says, XLM price predictions. No price predictions for XLM per se. I haven't been looking at that chart too much. I may look at it at the end if we have time, though. But yeah, not trading that too much, to be honest. Eswar, he said, hey, Luke. So I am not Luke. My name is actually John Luke. So one word. I'm not Luke Belmar, but we do sound alike. We do talk alike. So he's a great guy. A lot of good stuff you can learn from him. They say, love your analysis. I have a doubt regarding which time frame to choose while going for longs, shorts. Should we look into the 1 minute, 5 minute, or just trade based off the 1 hour, 4 hour, 1 day time frame? So that's the thing, Eswar, is you got to ask yourself, are you trying to scalp or are you trying to swing? Okay, I'll say this. The higher time frames are going to be more significant, meaning they're going to be a little bit more accurate because for each candle, let's just say, for example, on the daily time frame, like we're on right now, each candle represents 24 hours worth of data. So that's, at the end of the day, after 24 hours, this is where the market decided price should be. It's much more significant versus a 5-minute candle where you're looking at, okay, the market decided that in 5 minutes, price should be at 86,800. Well, this may not be a big support level. Okay, this may hold for maybe an hour or two, but long term, it's not going to hold more times than not. And so you want to look at the higher time frames to be able to really make your trade. So in my opinion, yeah, minimum I would say 1 hour time frame or more. Any shorter than that, and I mean you're just going to be scalping, and your time frame for your trade is probably going to be within 30 minutes or an hour, a couple hours. If you're using like a 5-minute time frame, for example, you're not going to be in that trade for long. Let's see. And then, yeah, Dabo saying, who is speaking here? I'm new here. Yeah, so my name is Crypto Data. John Luke is my real name, but Crypto Data is my handle at the Crypto Data on X. If you guys aren't following me, if you just type in Crypto Data, then you'll see me come up. Picture of a bull. Very, very easy to see. Let's see. S4 also said, also, do you have any advice for a 21-year-old like me where I'm about to graduate from college and I'm into crypto and content creation, graphic design? Have you got any advice for me in my 20s? Yeah, so I will say, guys, the younger you can start, the better. So you're 21, still a young guy, and you're trying to get into a lot, which is great, right? The younger years are when you want to take your risk. When you're 16, 18, 21, 25, even 30s, right? Because you can afford to take that extra risk, especially if you have another job. I recommend, if you have another job, even better, to invest that money into crypto, because you never want to do crypto full time if you don't have some savings behind that, or at least have some type of supplementary income, because it's going to stress you out too much until you have that experience. But as far as some advice for yourself, I would say get an actual job first. So you're in content creation, graphic design. While you're in college, try to build up your base, build up your social media following, build up something that's going to grow over time, right? It may not even make you money right now, but just building a following, building some type of experience in these fields, crypto and content creation, graphic design, that's going to help you after you graduate, because then, like, I would look for an internship. You're in college now, look for an internship. So when you get out, you have something. And then at that point, you could get a job there while you're doing crypto as a side hobby. I recommend for 95% of people, keep crypto as a side hobby, just like with stock trading, right? Like, until you have a lot of experience, then you can make it full time. But at the very least, make crypto a side hobby. Maybe when you get, an actual job, put $100 a month into trading or into, certain portfolio, whatever you want, Bitcoin, Ethereum, Sol, etc. But just have some type of supplementary income. That would be my biggest advice. And then also, this is kind of a tangent, but focus on health, guys. Like, health is wealth, and everyone, if you're eating fast food, if you're drinking a lot of sodas, you need to cut that out. Like, drink spring water, exercise, meditate, get some sun, eat organic food. Like, take care of your body, and your body will take care of you. You're going to think clearer. Either have like a high fat, low carb diet, even like keto diet, maybe not that extreme, or you can even have low fat, high carb. Like, choose something, but make sure you're eating healthy organic foods and you're on some type of regimented plan, and you're going to feel so much better. You're going to trade better. You're going to do better in college, in school, in your job, with your family. Like, people, they really ignore their health, and that's where you should be spending majority of your money, is on your health. Then everything else will fall into place. And so that's another thing I just wanted to tell. Also, praying is very important. Praying is like the most important, I would say, for myself anyway. So make sure you at least some type of religion. It's very important in my opinion, and could definitely take you far. Let's see. All right. They're saying, what do you think about the daily candle having huge upside wick and no wick to the downside? Yeah, so the daily candle for Bitcoin right now, again, we're at this inflection point, right? So we had all the moving averages where we had, and I'm just going to actually maximize the chart here. So we had the 60-day, 200-day, and the 50-day, all at an inflection point on the daily, okay? Most people aren't looking at these. I was probably one of the first to post about these and keeping you guys updated here. But if we can close above the daily, if we can close above this 85.5K level on the daily in another, call it 5 hours or so, at that point, that's going to be a big inflection point. And then I would look at longing. Again, if you haven't longed yet, potentially longing at that level around this 84 to 85K level. Okay, because this should be a big area of support. if it holds, right? Because already you can see this was a big area of support. If we even just hide these indicators, you can see in general, price rejected off here before multiple times, and now we broke above it. So it just happens to also match with these moving averages coming to a head. And so this is very significant. I wouldn't ignore this. The only thing I would say to be careful of is the indicators are overbought. At least the stock RSI is overbought. And we've seen in the past, anytime the stock RSI is overbought, right, all these times, price eventually comes to downside. Now, could this be a repeat of what happened in November of last year, where the stock RSI was overbought, but price continued higher, just chopped a little bit before continuing higher? Like, that could happen, right? That could very well happen. But the thing is you got to play statistics here. And so we are still coming up to a major resistance level around this 88K level, like I mentioned earlier. And so this is, again, is a good shorting level. Now, if we're going to come back down, cross below these moving averages, that'd be very bearish. Because what I mentioned before, I said, is price staying below these moving averages for multiple days? If not, well, look at that. It bounces. Just like here, is price going to close above these moving averages for multiple days, or is it going to close above for one day and then reject back to the downside, and now we're just continuing down? So you have to be able to wait for confirmation if you want to be on the safe side. Now, you could very well take this breakout trade and just go crazy, but there's resistance near 88K, so just keep that in mind, guys. If you're already in the long from Luke's long call, take some profits around here, recommend, and then from there you can decide, okay, do I want to continue, holding this long, or do I want to take profits or place stops at break even wherever I enter, just in case it goes back to the downside? So yeah, I would say upside target. I mean, 88K is a short term. Longer term, I would say 91K is a good level to watch, big resistance, and then 94.5K. That ties into perfectly the volume profile indicator, which we're going to talk about as well. Okay, we talked about moving average, momentum oscillators. Let's talk about volume-based indicators. So if we have, let's go, and again, for pulling up indicators on BloFin, I'll talk about this again. Okay, if you're wondering how to maximize your chart like this, because if you're trading on your BloFin like this, go to the top right here for this box, expanded box on the chart, click it, and expands the chart. And then the indicator button here next to the time frame, so you're going to click on that, and you're going to type in volume profile. And now do the visible range, and at that point, it's going to give you the volume of whatever you have on your chart. It's going to be the volume of those candles. So you can see the majority of that volume is concentrated near 97K. Okay, a big area of liquidity here. Now look where the second most is, right where we were at, this 85.2K. Okay, that's where the volume was concentrated, and now we finally broke above it into the second range. So this kind of acts as like a little pocket area here, because again, the volume isn't as much. So we could catapult up and come up to this 94, 95K level where there's a lot of volume here concentrated, which, just look at this, it is actually resistance and support. Okay, so that's why it pays, because all these support and resistance levels are, when people talk about these are magic lines, they're just concentrations of liquidity, volume, where you had the most buys and sells, and then you had a move happen. And then inherently, when it comes up again, you're going to have a lot of concentration of liquidity, and it's going to act as another repel or a magnet. Okay, so that's where you have to look at, and that's why we always look at volume and price, because those are the leading indicators. And that's why you can place your short. This was support in the past in February, and now when it crossed below it, it's resistant. So if you're like, okay, I'm going to short this once it gets here, that's a leading trade. You're catching the Pico top or bottom. Again, it's risky, especially if you're catching falling knives, like if price continues blowing through support levels. But nonetheless, if you combine this with your indicator, says, okay, stock RSI is getting close to being overbought. Potentially, this could be a good trade. Maybe if they aren't overbought, we still have the 50 EMA acting as resistance as well up here. So it's lining up with that. So again, you have some type of confluence there. So, but the biggest thing is these lines are respected support and resistance wise. Now, let's go ahead and go over some more things. So I want to thank you for actually having me mention that. Linda says, thanks for going into detail on how to use TA with these charts. Hey, no problem, Linda. Glad you guys are having a good time and learning a lot. Again, if you haven't liked the video, appreciate liking it. Helps grow the channel. Helps continue to give you guys these free content. And Urban says, what is the difference between RSI and the stock RSI? Great question. So the biggest difference between the RSI and stock RSI, I mean, obviously how they're calculated, but let's actually go a little bit more into depth here. So you can see how the stock RSI actually has two little averages while the RSI doesn't. Now, I will say there's a difference here, is if you want to have the smooth moving average on the RSI, you can have that as well. Okay, I know on TradingView, it actually makes this the default setting, having the moving average on the RSI. Some people don't like to have that, so some people take it off. Okay, but I would say the biggest difference is the RSI is going to calculate the amount of times that price went up or down from the chart. So, for example, if price went down multiple times, it's going to keep getting a lower value because over the past 14 candles, price was a net negative. But for the stock RSI, that calculation is actually going to be just a little different. Again, it still takes some things with the RSI, but it's going to add an extra calculation. So if you look at here, it has this percent K value, D value, and your upper and lower limit. So the stock RSI, it applies the stochastic oscillator formula to the RSI. So, okay, the RSI's default value is 14. Okay, so it takes an RSI into account, but it applies its stochastic oscillator formula. So the formula is the RSI minus the min RSI divided by max RSI minus min RSI over the last n periods. So it's much more sensitive than the RSI. It's good for short-term traders or scalpers. So that's why I like to use a stock RSI. And it generates more frequent signals, but it also generates more false positives. So that's why you have the RSI where it takes longer to reach these levels, but usually they're more accurate. Versus stock RSI where you've had it oversold, 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 but price didn't really do much and then continue lower. Whereas RSI was still in the middle of this range. And so that's the only disadvantage, is the stock RSI can generate false positives, but at the same time, look how many more signals it gives. Top here, top here, top here, right? Whereas here, the RSI was barely overbought. So then you had Confluence right there. So then that was a really good signal. But then here, the RSI wasn't overbought. RSI wasn't overbought, but the stock RSI was. So that's why that's where coming into play is the, okay, now let's look at the support and resistance levels, because this was a big area of resistance. So I draw a resistance line there, and look what happened. Boom. Another resistance line combined with stock RSI being overbought, and then we had to move to the downside. So that's where you actually can combine all of your various indicators. Now let me delete this. Chart's getting a little busy, and take away the volume profile. Okay, so that's the biggest difference with that. Now let's go over a few more questions. Again, we got about 5 minutes left, so I'll try to answer everything I can. Dean says, what is the name of that stock RSI? Yeah, it's called stochastic RSI, Dean. So if you go to your indicators and you type in stochastic RSI, it's right here. So you just click that, and then it'll add it to your chart. And also you can see the name. I'll put it, yeah, right here. So stock RSI. Hisham says, I love you, brother, and your absolute favorite. Hey, appreciate you, Hisham. Love you too. Polo Loco says, you still believe we will retest the lows? I don't think so. I don't think so. I think around the 76K level was probably the bottom. Again, there's still a lot of uncertainty with Russia, Ukraine, with the tariffs, etc. So anything could happen, right? I don't want to say for sure it was the bottom, but just the fact that Bitcoin, remember, it bounced off of that 50 weekly EMA. Remember how I posted here, posted off it, and you can see even more data right here. Okay, Bitcoin bounced off of this, and look how high it went afterwards. I mean, we're talking 90 to 150% moves. And so if we have that again, that would mean Bitcoin's going up on average to 150K. Now, I don't think it's going to go that high, but nonetheless, the fact that every time it's bounced off this 50 EMA, it's had a significant move to the upside. So this would be the level I'm watching, right? If it crosses below this 50 EMA, then I would look for, okay, potentially this wasn't the bottom here at 78K and we're going a lot lower. That'd be the only caveat I would say for that. But tentatively, I think we probably did reach the bottom. Steven says, thank you for your tips in these market chops. Been able to make a couple hundred without adding more money. Just buying, selling, buying, resistance, and support. Hey, that's awesome, Steven. So yeah, using that bounce strategy we talked about earlier, where you're buying at support and selling at resistance, or shorting at resistance. And so that's very important. And again, if you just know support and resistance, I mean, that's half the battle, honestly. Like you're already over halfway there and ahead of a lot of people who are just trading off of emotions. And so I would definitely make sure that you guys are using support and resistance at the very least. Philip says, what are your thoughts on Jupiter? No opinions on that. I mean, it wasn't doing too good recently. I need to look at the chart again, but it did bleed a lot. I know it's just a lot of FUD. but hopefully it should do good. I know that there's another big thing coming up that it should be another thing that Jupiter may back in the future. Another big project, but I'm sure they'll announce that when it's time. Fox9Tel says, will you still hold your Bitcoin or wait? You know, at this point, I mean, it did still, again, it is still above, right? All these EMAs, but just keep in mind that, again, it is above all these EMAs, but at the same time, it's reached resistance near this 88K level. And so if it can't break above this, well, it may have a further move to the downside. So I would say I would take some profits around this level, like at least some profits so that you can be ready just in case, because we did have an impulse to move to the upside, especially on the weekend. So it's good to see at least some taking some profits, as well as, again, playing the risk reward. That's what it's all about. You never want to go too much one way or the other. You still want to take some profits along the way, because at the end of the day, that's what's going to keep you profitable and keep you in the game versus losing money like 95% of traders do. Eswar says, can Sui beat Solana this cycle? They can, but it's going to be very, very hard. They need the mind share. They need the tech. They need the adoption. Adoption is the biggest hindrance to Sui. Because, again, you can have the best tech in the world, but if people don't use your network, then it's all for naught, right? And so, yes, it can beat Solana, but it's just if it's going to gain enough mind share to do so. Salah says, Lucy was a great long today with the Pope passing. Yeah, you know, I mean, unfortunately, he passed, but people who, again, there's opportunity in everything, and Lucy was definitely one of those more religious coins, right? So we saw it pump. So, I mean, it shows, like, crypto, there's always something somewhere. And so it's just being ready for that and being prepared in case something like that does happen. Let's see. Hey, no problem, nothing. Simon says, do you also use levels of support and resistance on the stock and RSI? And would you run MACD with them at the same time? Yeah, so Simon, you definitely could. So let's actually go over that here. So here's another thing. So you talked about SR line support resistance with the stock RSI. Okay, here. We can use patterns within these indicators. For example, stock RSI, look at this double bottom pattern. Okay? It is making a perfect W. That is a double bottom. Okay? And that is also support. So like you were saying, Steven, do I use support and resistance on stock RSI and RSI? Yes. Because just like this, when these patterns play out, even though price wasn't showing a double bottom here, it was down, stock RSI was, and look what happened. Price shot up afterwards. That's why you can, it's like Inception. You can find patterns within the indicators, like patterns within patterns, right? And so that's why it's very important. So it's oversold, and it's making a double bottom, and it's a divergence because it's making a higher low while price is making a lower low. So like you got all these levels of confluence showing you a move to the upside is going to happen. So that, yes, absolutely, if you can do support and resistance on these indicators, more power to you. Okay, it's definitely useful. But I would say as far as support resistance, I mean, again, like for example, a stock RSI can stay overbought or oversold for a while. And so maybe it may not be the best, but if you can find these patterns, like, I mean, I'm already seeing one right here. We already talked about a ascending wedge or a bearish wedge, as they say. But you can see that price, or at least the stock RSI, is converging, right? So it's making higher lows, but it's making lower highs. And we know that this is a chart pattern called an ascending wedge or a bearish wedge, and then it broke to the downside, and price broke to the downside as well. So there's patterns in everything, guys. And if you can actually capitalize on that because you've been practicing, because you've gone through the repetition of looking at these patterns, studying these videos, you can stay, you're ahead of 95% of people. And then you're the one taking their money, not the other way around. Bay says, where is Luke? Luke is around. Luke is around. He's staying active in the Gym Hunters chat. He's made some calls on Bitcoin and Solana, made people a lot of money. He should actually have some live streams here in the near future, probably early next month. He'll have some live streams here, so you guys are going to get to see him, get to interact with him. So just stay tuned, guys. He's going to start, you know, just posting more, being more active. But again, he's still very active in the chat. So definitely pay attention to his calls. And he's even more active too, you know, in Gym Hunters Premium as well. He's still posting there. But either way, you will see him more probably next month. Let's see. Steven says, what are the RSI and stock RSI numbers when market is oversold? So just like here, just where these below these levels. So for RSI, it's 30. When it's oversold, for stock RSI, it is 20. So just whenever it's below these shaded areas, that's when it's oversold, or above them when it's overbought. So let's see. Jasmine says, value info. I appreciate what you're doing. We are 100 winner persons here learning today, improving skills next. Yes, Thank you, Jasmine. We are 100 people strong. Definitely with that, make sure you guys like the video. Appreciate it. Try to give you guys the best content I can. Helps grow the channel. And then Real Fashad, what are your thoughts on streaming gaming to make money? Hey, that's another good thing to do. I would say start it as a hobby first, not full-time. And then if you're getting good at it, whether it's Twitch streaming or other platforms, then change it to your full-time job. But it's definitely possible. But again, you need an audience. You need to build up some type of audience. Even if you just start it as a hobby to build up an audience, if you're really good at a certain game, and then from there, you promote it across other platforms, on Facebook advertising, even on X, YouTube. Again, you're already been doing it on Twitch, but other platforms, then you can actually extend that even further. Edward says, what do you think about ETH? Why is it underperforming so much? You know, it's just been the way it is because, again, ever since ETH switched from proof of work to proof of stake, it's just been down only versus Bitcoin. It's very close to crossing its trend line. I've been posting some analysis in Jim Hunter's Premium, and it's close to breaking out. So pay attention to around the 1660 to 1670 level. If it can break above that, then it's probably going to send. Bay says, and who wins the McLaren? So Luke, I'm sure he's going to announce that in the future. But yeah, just stay tuned. I'm sure there'll be an announcement for that as well. Rafis says, will you ever do any live streams for meme coins? No, I probably won't, because we have other Jim Hunters that will cover meme coins. That's not my specialty. My specialty is market overviews and technical analysis. And so I could do TA on a meme coin, but that's about as far as I would go to that aspect. If I notice some altcoin trends forming around certain meme coins or certain narratives, I'll definitely post it in my daily market analysis. But other than that, making calls or doing like full videos on memes or finding memes, not really my specialty there. Let's see. Ayush says, love from India. Thank you so much for the content. I just want to know, when is the right time to make crypto full-time? Ayush, whenever you make a full-time income is when you can switch to full-time. Meaning, if a full-time income for you in India is, let's just say, you know, $5,000 per year or $10,000 per year, then at that point, when you start making that with crypto, go full-time crypto. If full-time income for you is $40,000 a year, then when you make $40,000 per year in crypto, or can extrapolate that out on a monthly basis via, what is that, you know, over $3,000 per month, then go for that, right? It just all depends. But when it can supplement your full-time lifestyle, then you can switch over to crypto. But definitely, I will caveat this. Have a nest egg, have a safety net before you go full-time crypto. Even if you're making 3K a month or 4K or 5K a month, like, don't go full-time right then. Make sure you have some stashed away in the bank, 15K, 20K in the bank, and then, okay, maybe I can consider going. Because here's the thing. If you literally need to make rent and you need to make, you know, certain money per month and you don't have any reserves, well, your emotions are going to be all over the place. You're going to say, hey, I need to make $1,500 this month to pay rent. Well, if you don't make it off crypto and you're broke, well, that's going to be a lot more stressful versus, okay, I have 20K in the bank. I can afford to have a few months where I'm not making profitable trades, but I'm still making the statistically positive trades or the advantageous trades to where if it doesn't work out over time, they should. And you have like a buffer zone. So yes, please have a safety net, have a lot of money in savings just in case if you go full time, it doesn't work out for the first month or two. That's what I would say. But yeah, make sure you're profitable beforehand and then you can go from there. Let's see. All right. Powers of Four says, hey, do you do any order book footprint analysis? You know, not really. I should do more of it, but order book is a little bit too in the weeds for me. I'll still look at liquidity levels on CoinGlass, like I mentioned in my daily market updates and my Bitcoin analysis. Besides that, though, I don't go as in depth. But order book footprint analysis is very good, especially spotting real-time reversals or continuations, because it looks at, again, the real-time data, the leading indicators such as volume and price action. So, yeah, it's a good strategy if you're good at it. Nothing says, is there a book for reading you can suggest? I really like learning things by reading. Yeah, look at Trading in the Zone by Mark Douglas. Trading in the Zone by Mark Douglas. Good trading book. Bay says, can we use only RSI or 60-40, or what do you think about? You know, backtest it, Bay, and see what works for you. If there's RSI levels that are 60 and 40 and they work for overbought, oversold, then it could work. So yeah, just whatever works for you, backtest the data. But at a minimum, I would use RSI with potentially a 200-day moving average or a 50-day moving average, and that would be a good little spot with your support resistance levels at the very minimum. Then you could add stock RSI if you want, or other indicators. But yeah, at the very minimum, I would say RSI, stock RSI, and some moving averages. All right, real quick, and answer quick questions, then we'll probably end the stream. Again, like the stream if you like it, guys. Really appreciate everyone watching. Thank you for giving your time to learn about TA. Sohag says, thoughts on Sol, Doge, AVAX? Solana, bullish. Doge, indifferent. AVAX, indifferent. Just because GameFi, eventually it'll take hold when GTA 6 comes out, which who knows when that's going to come out. Maybe by the end of this year. But nonetheless, it's going to create a lot of hype for crypto when it does. But yeah, I'd say more bullish on Solana versus the others. Hisham says, you're my role model. Thanks for your efforts. Yeah, so I'm not Luke. I'm John Luke. Different guy than Luke, but again, still talk similar. Let's see. Hard facts isn't playing to short at this level. Yeah, not a bad risk reward with your stop loss around 88,900. Glam Report says, do you use Fibonacci tool for entry as well? I don't use it as much as I should, but yeah, I definitely should use it more because the Fibonacci ratio, the golden ratio, 618, very, very important and is used to predict a lot of moves. So yeah, Fibonacci is another great tool. Hey, Dreamer, no problem. Glad you're enjoying the content. Let's see, Jay, good news chats. Steven says, good recent news from Sui partnering with Athens Stock Exchange. Ah, good to know. I'm going to probably post that in my market update today. Thank you. Glam says, do you use Fibonacci for entry as well, like first pump and after a dump and then entry at 0.5 favor below? Yeah, it's possible. You can use a 0.5 to 0.618. Good levels there. Yeah, so very good to combine those. And then Jay says, can we get more videos of setting up depositing money in your BloFin Photon account? Hey, Jay, so yeah, actually, if you're in the Gym Hunters free group, make sure to join it if you aren't. Links in the description, as well as join under the Gym Hunters BloFin affiliate link because it helps us out a lot and we can keep giving you guys free content. But the BloFin tutorial video and Photon is going to be actually pinned in the free group. So if you go to the Gym Hunters free group and go to the first pin message, like keep clicking the pin messages at the top of the free group until you get to the first one. That's going to be your tutorial videos for BloFin and Photon. We go over how to deposit, how to trade, how to use leverage, all that stuff. So definitely watch that. Raphael, no problem. Glad you're enjoying the content. Remy says, please start live trading. I lost all my money. Remy, I wish it was that easy. But again, the market's going to do what it's going to do. And, you know, yeah, live trading is definitely a lot more dynamic. So I don't really scalp as much. I mostly swing. But sorry you lost all your money. Again, always make sure you're practicing proper risk management and never invest more than you can afford to lose. El Huay says, what do you think of Trump coin? Will it get back this cycle? Man, I don't think Trump coin's going to get back. I mean, they've provided some value with it to where people who hold the most Trump coins are getting, I guess, access to a dinner. If they hold a certain amount to a dinner with Trump. So that's why we saw a recent pump last week. But besides that, it's hard to say. Unless they create some type of utility for it, then it may just continue ranging between $5 to $10. Let's see. How can you estimate trading zone breaking a significant pattern? No, it's just when it breaks above resistance and then it retests it as support. That's the confirmation you want to look for. It has a couple candles where it's breaking out above and then it retests it as support and then continues higher, or vice versa. Jay Carter says, do you take trades without stop losses? No, I always have a stop because the market can always screw you unless you're willing to lose all the money you have in the trade. So if you have a $1,000 portfolio and you're, say, risking $30 and you're willing to lose all that $30 and you don't place a stop loss, that's fine too. But just, again, manage your risk accordingly with how much money you're willing to lose. Urban says, what is your main trading strategy that earn you the most money, swing trading or long-term holding? So, great question. Great question. Originally, it was long-term holding because we were in a hodl mentality market, whereas you could buy and hold a coin and you would get the returns over X amount of years easily, right? Nowadays, in this cycle, buying and holding isn't working. Most alts have bled 90% while Bitcoin continues to rise higher. And so the advantageous trade or strategy this cycle would have been swing trading, longing and shorting. And so I think it's a combination of both. I think, though, more likely than not, especially the past year, swing trading has absolutely made me the most money. Because like I said, a lot of alts have retraced all of their gains they made over the past 6 to 12 months. And so swing trading would have really hit it on the head there. And so, yeah, I would say you're probably better off learning swing trading and mastering that versus buying and holding. But with that said, small caveat, if you can buy and hold at these major support levels, then they can be very advantageous if you're just holding, right? Which is, again, another form of swing trading, but just be cognizant of these big resistance levels, okay? That's all I would say, is just take profits along the way because you don't know when the market's going to turn. Use all your tools at your disposal, like the indicators, like the Fear and Greed Index, like the resistance levels, etc. For Shad, what would you recommend if my move is to find a job and I don't know what to do? What skills do you have? You know, build up some type of social media profile, provide value. The biggest thing is, where can you provide value? What are you good at? If you're not good at anything, then go to, you know, learn something. There's a lot of free tools online. Learn how to drop ship, learn something about e-commerce, learn more about crypto, learn a skill. Like, there's all kinds of free tools. You can learn whatever you want for free. And so find something where you can learn, or at the very least, I mean, if you're trying to make money, find an easy job. Even working at McDonald's, like, we all got to start somewhere. I started sacking groceries originally at Kroger. And so again, we all got to start somewhere. So just start somewhere, make some money, and then build another skill on top of that, right? Building up your resume with another skill on top of that on the side. But there's so much opportunity, especially with AI. Guys, you can make so much money online nowadays. Like, just the tools are there. You can use ChatGPT. You can use these other AI tools. Like, there should be no reason why you shouldn't be making money, or at the very least, learning a new skill to make money. Let's see. Jay Carter says, I'm thinking of going premium today. Thanks for your time, CD. Hey, that's awesome, Jay Carter. If you're going to join premium, welcome. Definitely send me a message once you get there in the group. Always good to see you. And anyone else who wants to join premium, it has 1 Ethereum, and it is actually at a 50% discount. Last year, it was 1 Ethereum, and so, which, you know, $3,500. And a lot of people paid for it at that price. Now you're getting a 50% discount. And so, in my opinion, it's one of the best values. And if anyone who didn't see one of the posts I made about it, real quick, talking about Jim Hunter's Premium, is over the past year, they've made over 340 trades. They were 76.6% profitable. Now, for anyone who knows anything about profitability in trading, anything over 70% is insane, okay? Jim Hunters were 76.6% profitable, over 340 wins, with the average profitability per month being between 68% to 310%. This is per month. Okay, so if you just think about those results, that's consistency. You have 40 plus calls per month. You have daily live streams, gym reports, market updates, more thorough. You have, what else do you have? You have DGen calls, gym alpha calls, more leverage calls. You have 24/7 concierge service. Any questions you have? Like, there's a lot of benefits to the premium group. And just think of it, it's an amplified version of the free group. So again, we provide you guys with as much value as we can in the free group. The premium group is just this group, but on steroids, and it's in Discord. So it's a little bit more conversation going on. Let's see. It's going to answer a few more questions, and I got to end it. Ayush says, how's Trump tariff is going to affect the market in the near future? Honestly, I mean, I think most of his actions on tariffs have been priced in now. It was a big shock to the market when he initially did it and kept doubling down. But now I think with the bounce that we've seen and crossing over these big moving averages, like, he's, you know, the market's basically digested all the negative news that's going to happen from tariffs. And now it's looking at any positive news from China negotiating with the U.S. finally, or the Russia-Ukraine war ending, hopefully this week, which he was alluding to a couple days ago, which was the reason for the pump. And so there's a lot of different factors that coming into play. But I think, again, most people have priced in the tariff news. Unless there's some crazy thing happening with tariffs, I think companies and markets are starting to adjust. Linda says, BloFin said I'm in an area where I cannot deposit. I live in Florida and have been transferring from Robinhood as a workaround. Should deposits work for someone in Florida, though? Hey, so for anyone using BloFin, I do know that a lot of people use VPNs, so like NordVPN or others, and then you're able to use BloFin non-KYC. You're still able to use it at that point. And so if you want to go that route, you can use the VPN route and then stay non-KYC, meaning you don't have to verify your identity. So yeah, VPNs are a good way to use that, Linda, if you need to. Let's see. El Wahe says, saw Luke say this month will be green. What do you say about it? Yeah, I think this month could very well be green. There's a lot of factors I posted on my X account at the Crypto Data, where I posted that you have the M2 money supply in May. You know, the lag for the M2 money supply, it's 108 days versus Bitcoin. It's been reaching all-time highs. Bitcoin should catch up by May 1st. Seasonality-wise, in 2020, Bitcoin was green in April and May. And now if we repeat that same action in 2020, which we have since January, then this month should be green, as well as next month should be green. But just keep in mind the big mantra of sell in May and go away in the TradFi space. So usually people end up selling in May, so keep that in mind. Is definitely secure your profits, guys, over these next few weeks. If you make a lot of money, start taking some off the table. DCA out, right? We always say DCA in when it's going down, the dollar cost average in, but also dollar cost average out for your profits as it's going higher, especially reaching those major support levels or resistance levels. Let's see. Stop loss on Solana short. I would say, I mean, definitely, you know, 155-ish. But if you're looking for a closer stop, probably above 140. Awesome. Sweet. All right, guys. Appreciate all of you guys. Jay Carter said stay in USDT soon. It's very possible, right? So, yeah, if there's going to be a pullback soon, it could be good to take some profits along the way here. But, yeah, I still think we could have a big move. Just going to have to see how this next few days of daily candle closes happen. So, thank you guys so much for watching. Again, if you like the video, like the stream, please like it. Really helps Gem Hunters, really helps us grow. We're going to keep providing this content for you guys. Use BloFin if you haven't. Sign up in the description. Join Gem Hunters free group if you haven't, in the description as well. Love you guys. Thank you so much. And have a great Monday. And I'll talk to you guys soon. The weekly market overview is going to be tomorrow. Just so you guys know, 12 p.m. CST. Make sure you're there. I'll post a lot of good stuff as well. Thanks, guys. Talk to you guys later.